Nothing. There's literally nothing except for one thing, Bitcoin. That's it. Since we've had this conversation, the dollar's gotten cheaper.
In today's wonderful discussion, we have the fantastic and legendary James Lavish of the Bitcoin Opportunity Fund. James has experience being a hedge fund manager as well as now part of the multi-deca-million-dollar fund investing in Bitcoin startups, Bitcoin Treasury companies, and other Bitcoin opportunities for high net worth investors. I've found today's conversation really useful because James talked about his experience being in the hedge fund world. He helped us better understand some of the mechanics of why hedge funds act the way they do and what that means for Bitcoin price. We had the conversation about why commodities in general are ready for a long-term macro trend in their favor, and why, of course, there is no second best commodity. Bitcoin is the best. We also, importantly, had the conversation about why treasury companies eventually could have a bubble, how to know which treasury companies are going to win and lose, and ultimately how to best position yourself in terms of timing and in terms of first principles, picking the winners in the course of the many options you have. I think you're going to really enjoy today's conversation. Really quick, I wanted to tell you about two things that you may not be aware of, but I think are really important for you to hear about. The first thing is the conversation about Bitcoin loans. Everybody has lots of questions with Bitcoin fiat denominated and Bitcoin denominated loans. And so really briefly, I want to talk about the latter, the Bitcoin denominated loans, because these are the best use case of having collateral and having accessible equity for investing in Bitcoin opportunities, whether that is James's fund, the Bitcoin Opportunity Fund, or you have another interest of your own decision, right? In whatever company or opportunity or lifestyle upgrade you're thinking about, this is the perfect kind of loan that would be accessible for those opportunities. Why do I say that? It's because it is the best asymmetric bet in your favor if your denominator is Bitcoin. Okay, that's really important to mention. We're talking about a 5% interest rate. We're talking about a 1 to a 5-year term. We're talking about a 95% lend, not 50, 95% lend. That is so important for increasing and optimizing that opportunity cost you have. We're talking about this product is available globally. Now, it's only available to clients of the Bitcoin Advisor because, of course, our clients are sophisticated clients that want sophisticated products. This is not a product, available necessarily for everyone, which is why there's a whole application process. More on that in just a moment. But there was zero origination fee. There was zero monthly payment, zero credit score, zero counterparty risk because there was zero hypothecation risk, zero recourse on the loan because it is full self-custody. Why is this product better? It is because it is full self-custody. So if you're somebody that is trying to increase your Bitcoin stack in an intelligent way that is denominated in Bitcoin, feel free to book a call with me. The information is on the screen or in the description below. Book a call with me. Let's have a conversation. Like I said, this is a sophisticated product. However, it is the beginning of many, many, many more coming down the line that I think you'll have interest in. Also, of course, we can always have the conversation about fiat denominated loans as well, because believe me, that's accelerating just as fast on the other side. The second thing I want to tell you about really quick here is an event that myself, as well as James Lavish, is a part of coming up rapidly in October of 2025, and that is the one and the only Camp Nakamoto. Camp Nakamoto is a 3-day private event, family friendly, for just under 120 to roughly 150 Bitcoiners on a private island in Lake Winnipesaukee during the peak fall colors of New Hampshire. It's going to be a wonderful time. We have excellent guests and speakers coming in person. Myself, Larry Lepard, Mark Moss, and well over a dozen other speakers, BJ Dichter, and there's plenty of other folks. Wonderful food provided by Texas Slim, wonderful wine provided by Ben Justman at Peony Lane, excellent companies, excellent Bitcoiners. We're not there to be speakers. We're there to make friends. We love hanging out with you. I love hanging out with you all. You all are not just numbers on a screen to me. You guys are human beings. And that's why hanging out in person is one of my favorite things of anything I do in Bitcoin. So if you're somebody that doesn't necessarily justify spending the money on flying to a city across the country or across the world to sit in some conference room for a couple days and maybe get a couple minutes with one of your favorite Bitcoin speakers, if you would have 3 days with your favorite Bitcoin personalities, both in public as well as offline, everybody there is going to be a wonderful person to interact with. Feel free. Information is on the screen or in the link in the description below. Find a time to talk to me or one of the other guys putting on the event. Would be more than happy to have you. It's going to be a lot of fun. You're going to make memories. Bring the wife, bring the kid, bring the business partner, bring that neighbor that you can't quite orange pill yet. It's going to be a wonderful time. We're going to make lots of memories. And ultimately, the goal is help everybody there level up their knowledge, but more importantly, level up your networking. And I think a better word than networking is friendships. So if you want to engage in a high signal, low noise Bitcoin networking gathering in a beautiful place, I think this is the kind of event for you for the latter half of this year. So check out Camp Nakamoto. All kinds of lodging are available, no matter if you want a hotel room, you want to if you want a 10 or you want a log cabin, right? All those options are available to you no matter what your personal preference is. And I think it's going to be really, really fun. So you have all the information for both the Bitcoin Treasury loans as well as for Camp Nakamoto. So without further ado, enjoy the conversation with the one and the only James Lavish.
Awesome. And good to be here, Luke. Always good to talk to you.
Everyone is really curious about Bitcoin and
Mhm.
cycles and what on earth we should do with all the changes in the world. Obviously, I think you know all the basic pressing questions. So instead of asking you those, I would like to just ask you what is on your mind and what is keeping you the most interested right now in the markets.
Yeah, I mean, look, we're in the summer doldrums here. It's the depth of it actually. July and August, it gets pretty quiet in the markets typically. Activity is down, volumes are down, volatility is down. You could see it in the VIX. It's now hovering. Let's see where the VIX is today. I mean, it's been super low, right? So picked up a little bit. Now it's at 17, but it's been pretty low for the last number of weeks, and so that just tells me that it's just a quiet period, and we haven't had a ton of economic data come out until last week, where we did have some interesting revisions to jobs numbers out of the BLS, and that kind of spooked people. And now you had some numbers this morning from ISM, the services index, and it's suggesting that we have a slowdown here too, with actually a pickup in prices. So the markets are a little bit spooked, and they've been jumping around a little bit. But again, it's on low volume. It's really been quiet out there. Bitcoin in particular has been, as you've seen, it's just been tracing back and forth between the 114 to $118,000 level for a few weeks now. It's just kind of going back and forth, and so I think people are waiting for more information. You had the Fed that came out last week. They didn't move interest rates. No surprise. There was a very, very low probability that they were going to do that. Investors did not expect it. You could see that in the interest rate probabilities monitor, and you could see that but after the Fed spoke, and we had those numbers, the revisions to the jobs numbers last week, where they revised the numbers down severely after the prior periods, the two prior periods, they revised down, and over the course of this year, now we've revised jobs that we thought we had created down by almost 500,000. So that's gotten people's attention, and of course now you're getting pressure on the Fed to lower rates, because people are saying that we're entering a period of stagnation, where you've got at least the economy is kind of slowing down, inflation's not out of control, trueflation is showing under 2%, and the unemployment rate is ticking up, and so what you're hearing investors say is we want to avoid a recession here. It's time to bring these rates down, because in reality, you're seeing bonds move around quickly, rapidly, and in response to this information, and so it's clear that investors want lower rates, want to avoid a recession, and now that's kind of what everybody's looking at. We're waiting for more information. We're waiting to see what kind of verbiage we get out of the Fed, especially with all the the attacks coming out of the White House, and Trump being antagonistic with them. It's no different than past administrations, especially the last one with Elizabeth Warren was hammering the Fed to lower rates, and now she's hammering Trump, and criticizing him for asking for lower rates. It's kind of a big circus in there. So, but yeah, so the word of the day is uncertainty, and it's just kind of a slow, quiet environment at this point.
I think the word is uncertainty. And, this is coming from somebody that makes, Bitcoin content, but just in general. And I saw Natalie Burnell last week, and this is something we talked about this, but the markets hate uncertainty, and that's where all the volatility comes. But
Mhm.
that's the kind of content, that's the kind of emotion that really gets people engaged, right? When something's certain, everyone criticizes you for talking about it because, well, obviously, like we all agree on it, right? It's that uncertainty and probability, and so it's really interesting to me how Bitcoin has gone up so much over the last couple of years, but because of this uncertainty, people still get really greedy in some moments or really panicked and painful in other moments, whether from downside price action or just from boredom. Boredom.
Yeah.
Yeah.
Yeah. I
So,
mean, and look, we're in a period now where Bitcoin it's been holding above 100,000 here for a while now.
right.
And so from what we've seen, there are some OGs who have definitely reallocated out of spot Bitcoin into whatever else it may be. They might be buying houses, they might be buying yachts. I mean, these are billionaires, and they've been holding on to these coins for many years. And so the question is, are they now reallocating into these new opportunities in Bitcoin, like the pure Treasury plays, the Bitcoin Treasury plays, the micro strategies and the meta planets and this the 21s of the world? Are they kind of filing into those now, looking for more upside in the future, having already gained those nearly exponential returns in Bitcoin spot over the last number of years. So that's another thing that's going on. And I think that when people see OG selling, it makes them a little bit nervous. They're like, well, if these guys are selling, then maybe I'm buying at the top. But the reality is, can you really blame them? I mean, they've held on for so long, through a number of very painful cycles. If they still hold a number of coins, they want to change their lifestyle with that, then have at it. You know,
Right.
Godspeed, right? So
We inherently can't relate to their position because we aren't in their position, right? If we were in their position, we would be doing the same thing, and that's something I was,
likely,
yeah, that's something I think is funny is that you don't get to be that early to Bitcoin without some crazy, unique, strange story, right? Because if you had the normal story, you would have either had it all stolen or lost it all. So I think it's really interesting to see it happen. And what did you think seeing these 80,000 whatever Bitcoin sold by some OG when last year when Germany sold 55,000 or so, Bitcoin fell 10-20%. I mean, when I look
yeah,
at it from my much more amateur perspective, like Bitcoin seems to be doing really well at holding up above 100K, despite the fact we haven't yet really seen that rate cutting. So, zooming out beyond the turmoils of the given week or month, do you think that Bitcoin is doing very well? Do you think the cycle is disappointing? Do you think the cycle's going away or evolving? Or, I mean, big picture, I think
yeah.
it's doing great, but what do you think?
Well, I mean, I wrote about this a little bit in one of my recent newsletters, just talking about how you look at Bitcoin price over a long period of time. If you're not a trader, if you're an investor, then you have to kind of zoom way out. So, first of all, just first principles. I mean, we talk about cycles in Bitcoin, and it was very important in the early years of Bitcoin, because of the sheer amount of coins that were coming into the market from mining. But that's dropped so severely now that I don't see it as quite the same impact as it was before. So, and you're looking at past cycles. There's only been a few cycles, So how much data is that really? It's not that much to extrapolate forward from, right? So at the same time that this is a new technology. It's been around, for just over 15 years, right? Gold's been around for thousands of years, and Bitcoin has already captured 10% of gold's market share. Now, they're not apples to apples yet. I think they will be, in the future, in the near future, meaning Bitcoin will take that premier store of value, flight to safety crown from gold at some point, in the near future. But I mean, in just that short period of time, you could see how rapidly Bitcoin is being adopted. And one of the measures of that is just the pure energy it uses to secure the network, that network effect that we talk about. The network effect is it's undeniable, and it's getting stronger every single day. And so, with Bitcoin up here at over $100,000, I think it's actually a much safer bet than when it was down $1,000. And it's the network that creates that risk reward. Now, are you still going to get your 100, 200, 300x returns in Bitcoin? Well, I mean, it really depends on the long-term cycle and in your and what kind of time frame you're thinking about and what you're measuring it against. Are you measuring against fiat? Because the Bitcoin maxi mantra is always one Bitcoin equals one Bitcoin. And so, what is it worth in the world? Not is it worth what is it worth against fiat dollars, right? So, um, but the reality is that these cycles are showing that you've had rapid adoption. Now, you're going to have the same cycles going forward? I don't think so. I think that we've broken out of that mold. I don't think we're going to have the same 4-year cycles. Will we have drawdowns? Absolutely. Will they be violent? I believe they will be. And again, it's because you have this rapid adoption. If you look back at Amazon back in 1998, 1999, I mean, that thing fell 95% from its highs. And if you look at a chart today, just a regular price chart, that looks like a little blip. I mean, tiny little blip back then compared to where the price is now. So, and I think we're going to experience the same thing in Bitcoin along the way. And especially if you zoom out and put it in a log chart, it's much easier to see these moves and see the percentage moves from year to year or cycle to cycle, whatever you want to say. But the answer is, Luke, it's being adopted not just by individuals now. Now it's being adopted by companies, and you're seeing sovereigns buy them. You're seeing nation states buy Bitcoin, and so it's a completely different game now. How is it acting? It's acting fantastically. I mean, you had 80,000 coins come into the market, and it barely moved it a few percent. I mean, that's nothing. It's held up very well. There's clearly very strong demand out there. And again, now it's not just from the individuals. You've got companies and these new treasury companies that are out there buying with seemingly an insatiable appetite.
Mm-hmm. Oh yeah, I agree with you that I think we're going to see more of this chop consolidation than the euphoria and then panic. I'm curious to hear, what do you think then, since we both believe there will be downside in the future, what do you believe the new catalysts will be? Do you think it's just going to be liquidity from the Fed, from the government? Something I wonder more and more is about, at some point, I'm not saying now, but at some point, if the treasury companies become kind of like a bubble, like a dot-com style kind of thing. So I'm just curious, as a general principle, right? Not that we're necessarily saying this now, but as a general principle, what would your warning signs be in the future to say, hey, I think a lot of these treasury companies, in mass are not sustainable, or hey, I think that liquidity is going to tighten, or whatever you think the catalyst might be.
Yeah. Well, I mean, look, we're invested in these things. Just full disclosure for your listeners, I'm a managing partner of the Bitcoin Opportunity Fund, and we are invested in a number of these companies. Uh, some of them we have very high conviction on long term, and others we don't. There are some that there's some treasury companies out there that we're not invested in for the reason you're talking about, is that we just can't get to a spot where we feel comfortable with where the multiple of their stock is trading to the underlying Bitcoin and their prospects of buying more Bitcoin and how they're planning on doing it. There are some great managers out there, some great investors in this space, and there are some very healthy companies out there that are doing this. And we think that they have a long term, a long road ahead, and they can remain healthy even in a terrible Bitcoin cycle. Really depends, Luke, on how the company is attaining that Bitcoin and how they are leveraging their balance sheet to do that, and what kind of position they're putting themselves in to need to sell Bitcoin if we get into a serious downturn and they can't finance that future growth and the debt payments that they have, the interest payments on whatever they're borrowed to buy that Bitcoin in the past. If they can't do that, then they'll have to sell Bitcoin at a serious discount, and that could just force a bit of a spiral. So it really depends. It's company specific, it's manager specific, it's their plan. It's specific too. And so, do we think that this it's not a euphoria yet, but do we think that this focus and this great expansion of treasury companies continues ad infinitum? The answer is no. We do believe that there will be a downturn, there will be a consolidation, but it'll likely be healthy, and the best companies will emerge strong. So.
What do you think that for the average person is the right way to think about it? You know, the way I encourage people to look at it is to have a solid base of self custody Bitcoin, and you know, if they're going out in the risk curve, to be very careful with how they do that. So just in general, for those watching this, either maybe new to Bitcoin or really more likely than people new to Bitcoin or people that have already been in Bitcoin a while, what would be your framework when looking at deciding when and where to go out in the risk curve and when and where to lock down what they already have before trying to get more?
Yeah, I mean, I got to tell you, Luke, there are some companies out there that trade up so rapidly once they come to market with their treasury plan and their strategy. They're difficult to buy in the open market. So there are some that are they're great value. And again, I want to shy away from talking. I want to be careful about talking which ones specifically because we do own some of them. But you know, the question is, where are you able to get in? And that's why we personally love investing in these for the fund because we're buying these at a severe discount to where they're coming to the market. Because it's kind of like back in the old .com days where you had these companies that you had advantage of buying before they came to market if you were a hedge fund or if you were a large money manager because you were getting allocations from these IPOs. It's similar, but remember, we're taking the very, very early risk here that they're going to come to market with the plan that they said they're going to execute. So, but because of that, and if we choose wisely, which we so far have, we have some extraordinary paper gains right now in our fund because of just the sheer excitement around these and the ability to buy them pre-market. So what I would say is, look, you're looking for companies that are not putting themselves in the position where they have so much leverage that they're going to get into trouble in a drawdown of a 40 or 50% of Bitcoin. That's really the baseline. I can't get to a spot where I believe that Bitcoin is never going to go down 40 or 50% again. I just can't get there. I do believe that it has a rapid rise between now and then. You know, I do believe that it does eclipse 180, 240, maybe 300 before it has that drawdown over the next year. So it has a nice appreciation in price over the next year. Who knows when the drawdown happens? Now, the other question you ask is, what would be the catalyst? Well, we don't know. Obviously, there's plenty of black swans that we can't even dream up today. But that's the problem, Luke, is that even though you and I believe that Bitcoin is the ultimate flight to safety, there are investors in this space that are using it as a risk asset now, number one. Number two, it just becomes it becomes a matter of liquidity. So when you're a hedge fund manager and you're not at the Bitcoin Opportunity Fund, but you're a hedge fund manager of a typical hedge fund, and you've got all these different asset classes that you're invested in, and you're talking about being anything from early stage to late stage venture private equity to just straight equities. You might have technology companies. You might have cyclical, non-cyclical investments. You may have pairs. You may have converts. You may have arbitrage. Whatever it is, you've got this whole mix of assets that you're invested in and bonds, and then a whole another mix of types of bonds you're invested in. And so when you have a drawdown, whatever it is, what happens, and I've talked about this before, is that you're a hedge fund manager and you're sitting there on the weekend, or on a Thursday or a Friday, it's late, and things are happening, and you're going to look for liquidity because you know that you are going to be in the position, if you're your typical hedge fund manager, you're just using Reg T, you're not using portfolio margin, where you're levered up 3, 4, 5, or 10 to 1, or more. You know that you're exposed to possible margin calls. It's not just that you've put yourself in the position that you're going to be margin called on your current positions and your current calculations. The issue here is that when you have a drawdown, those calculations change, especially if you're on portfolio margining. So if you're what that is if you're a hedge fund, you're using your prime broker, they give you better than 2 to 1 margin. They'll give you, as much as on a regular hedge fund, they'll give you as much as 20 to 1 on individual names that are, bellwether blue chip names. Now, these blue chips are things like Apple and Amazon and Microsoft, and so you can get something that's called a haircut on those, which is only 5, 6, 7%. Well, that means that you can borrow 90, 3, 94, 95, 96% on these names. But when you come in on a morning where there's been a drawdown in the markets, you're going to get a call from your prime broker that says, we're changing the margin requirement on these names. It's not 6% anymore. Now it's 20% or 25%, which is, that can be devastating. We all experienced it back in 2020, and that's part of the reason the market crashed so violently, is that you had the margin, levels were changing all over the street. And so, what happens when you expect that? Well, you just sell a certain amount of your portfolio. Like, you just walk in and just say, just sell 10%, sell 10, 15%, get me out of it doesn't matter. Don't try to figure out which one is, like, you sell what you can, not what you have to. And that's why everything correlates to one. That's why you have all assets start going down. It doesn't matter if it's a 2-year treasury, a 10-year treasury. It doesn't matter if it's Amazon or Nvidia. It doesn't matter if it's gold. Like, you're just selling everything you can in order to raise cash, in order to fortify your balance sheet and your portfolio, in order to protect against a margin call where then you have to sell at even worse prices. So that's what happens. And when that happens, Bitcoin's not going to escape that. You know, it's gonna be part of that. It's going to be lumped in with everything else. In fact, it may, like I was alluding to, at the beginning of this, question, or the beginning of this answer to your question, which is, what happens on a weekend? Why does Bitcoin move so violently on weekends sometimes? Well, sometimes you have news that comes out late Friday or sometimes on Saturday, and you're a hedge fund manager, you're sitting there at your 12-year-old kid's birthday party, and you're looking at your phone, you're like, oh my God, like, it's gonna be a bloodbath on Monday. What can I get out of today in order to get a head start on that? Well, what trades on the weekend? Nothing. There's literally nothing except for one thing: Bitcoin. That's it. That's it. You can trade that. That's what you get to move. And so that's why Bitcoin sometimes has these violent negative, price moves on weekends, and it's a reaction to, the expectation of a drawdown in the markets on Mondays, and that's just reality.
Very interesting. It makes a lot of sense. Everything you're saying. I'm curious, as we see these treasury companies, is something a lot of people ask it, and it's something I ask myself, is how much can they actually get, right? Strategies at whatever, 650,000 coins. The meta planets and the other mid-sized ones are, between 10 to 40,000 coins, right? So 10 times smaller than strategy. But, realistically, we're at about 1 million Bitcoin that these treasury companies own. And looking at just trying to think about the future, what do you think is going to be the long-term trend of how many they get? Do you think that the treasury companies, let's say a decade or so from now, do you think that they collectively could get up to 4 million coins, 10 million coins? I mean, like, in the future hyper Bitcoinized world, or not even in a hyper Bitcoinized world, but in a world that's trending to that, like, what roughly do you think should be the Bitcoin allocations between public sector with governments? And obviously, that's something we haven't talked yet about, but the bit bonds and everything else, obviously, the governments are going to get involved. The Luminous bill, right? America with the million Bitcoin or whatever,
Mhm.
and I think that would be an interesting conversation to have, or just something I would like to hear from you, to try to gauge of like, it's just interesting to me how if we're at 1 Bitcoin now, or 1 million Bitcoin now, and we're going to, let's say, 5 million Bitcoin, that's a 5x the number of coins, but we're going from maybe 50 companies, treasury companies, executing this in size to thousands. And so, anyway, it's just interesting for me to think about. I'm curious if you have any thoughts on logically what makes the most sense as Bitcoin eats the world.
Well, I mean, there's a different reason for these treasury companies to come out of the gate straight and succeed, right? So, one reason is you're just early and you're using financial engineering in order to capitalize on what we're seeing as um, it's an arbitrage between the fiat capital markets and the Bitcoin, the Bitcoin market, and to be able to buy Bitcoin by borrowing from fiat using the capital markets to do that, it's just a pure arbitrage long term, and that's how MicroStrategy did so well so early. So that's one thing. Then another you know reason to have one of these is like MetaPlanet saw an opportunity in Japan in that there's no real way to buy Bitcoin if you're in a regular market, if you're a regular investor, unless you go on to one of these exchanges and you set up your Coinbase or whatever to buy it spot. But there's no way for a regular investor to get it in like a retirement fund or use their stock portfolio to buy it. And same thing with institutions who are institution institutional buyers in Japan, like pension funds or endowments or whatever. The same thing. So there was an opportunity there to create a Bitcoin vehicle. It's a proxy to owning Bitcoin. And so they saw that and they capitalized on it because of a regional issue, an issue with just the regulations. And so that's another reason to do it. And we're seeing that in South America too. Obviously, you and I talked about a couple of companies that are doing that too. So so the question is why? Why are you doing it? How are you approaching it? Where are you getting your liquidity from? How are you arbitraging those capital markets to do it? And so that to me means that there's kind of a limit to how many of these that we're going to see. I don't think we're going to see thousands and thousands and thousands of them. If we do, then that to me would be bubbly. There's only so there's only so much demand through the capital markets for this product, for this financial engineering, and so again, we're not delusional and thinking this is going to go on forever and these things are going to, you're going to see 10,000, 50,000 of these companies. It's not going to happen. But what I do think happens, Luke, is it continues to bring Bitcoin to the front of the conversation of all these companies and deciding, is this something that we should be involved in for our treasury, even if we are not going to be treasury companies? But we're going to capitalize on Bitcoin in our treasury in order to help protect our investments and our long-term value of our treasury, rather than just having it sit there and melt in short-term treasuries, or even especially long-term treasuries, which would give you a negative real rate of return. So I think that once you start hearing about companies that are now just allocating a portion of their balance sheet, a portion of their own treasury to Bitcoin, that's where the real conversation to me starts, because we're barely seeing that now. I mean, just a few here and there, that's it. But again, there's opportunities for that. We're talking to a small company that is pre-IPO that has capital raised, and they're a technology company, And we're talking and working with them to advise them on how to employ a Bitcoin treasury strategy themselves, not in the ways that Metaplanet and 21 and the others and Satsuma are doing. It's a different thing. It's a reallocation of some of their treasury in order to protect their capital. And so, but once we start hearing that, I think that's a different conversation. And so, and that broadens out the ownership widely. So now it's not so concentrated in this financial engineering play or financial engineering track. It's more broadly being adopted as a strong asset to have in your balance sheet, and that's the exciting part for us.
Yeah, that's really interesting. In a way, it's almost kind of the opposite of what you're talking about earlier with the hedge funds, where you have to sell something because you have the margin, and fiat, it seems to me, incentivizes a lot of that margin and yield chasing and leverage on leverage, and with exceeding the high multiples, and Bitcoin disincentivizes that, it seems like, down the line. And so I suppose as we wrap up, zooming to the larger picture of governments, I'm really curious to hear about what you think all of this does to the yield curve, what all this does to the long-term trend of interest rates, right? You're one of those people out there that, famously always talks about how rates have been coming down for the last 40 years and everything, right? Basically pumping up bonds, pumping up stock valuations, pumping up housing and all those things, which of course everybody knows about the many ills economically and culturally with that, which we won't get into here. But what do you think would be the trend without Bitcoin, with that long-term yield curve and the long-term trend of interest rates, right? Obviously, it looks like it bombed in 2020 and it's like trying to creep up, right? So what do you think without Bitcoin would be, let's say, presumably the disaster that would come, and how that feedback loop would unfold? And then now that we have Bitcoin, now that we have strategy and Metaplant and all these other companies trying to create their own, quasi yield curves, right? And I know it's not the same, but how do you think Bitcoin changes that? Like, do you think Bitcoin could lower rates in the future, right? Eventually, as it gets incorporated into the government and hopefully helps make the world a bit more stable? How do you see Bitcoin changing that trajectory we're currently on?
Yeah, I mean, look, the trajectories, as Lynn Alden famously says, nothing stops this train, and that's just the reality. Is we're in a situation now where, um, you know, the largest economy in the world is spending so much money that we're running multi-trillion-dollar deficits, and so, um, and the whole world is watching, and so, that's not nothing can stop that because mathematically we just keep owing more and more each year. We need to expand the money supply, meaning we need to expand leverage and borrowing in order to expand GDP nominally in order to keep this whole charade going. It's no secret. We've talked about it for years now. The Treasury knows, the Fed knows, everybody talks about we're on an unsustainable fiscal path. We know that. So if there was no Bitcoin, I think that what you would have, Luke, is I think we would get to a point where the U.S. dollar would just swallow many currencies as their own, those foreign currencies, especially developing countries, collapse. And they just collapse right into the U.S. dollar, and the country has to just adopt the dollar as a base currency because they can't borrow in their own currency anymore. And so then they start borrowing in U.S. dollars. And so you would see a rise in U.S. denominated debt. And eventually, I think what would happen, Luke, is as we continue to go through the cycle, look, this fiat experiment isn't that old, and every single currency has collapsed before. So it's not a surprise for us. We've been alive. Every single person that I know has been alive during the dollar dominance period, right? So everybody we talk to every day. So it's really hard for people to even fathom that the dollar could collapse in confidence. Well, I think eventually it would, and the reason for that is that the debt would get so far out of control that we'd have to write it down. We'd have a huge write down of debt, and it would be a markdown of everything. And we'd go into some sort of Great Depression style of it'd be unfortunately, I think, dystopian for a little bit. It would be a really ugly period in history for money. I think Bitcoin can change that. Is that it? We have a parallel network we can get to here that will help save the governments from themselves, where they can now store value in something that can't be inflated, and so that will back their own currencies effectively. So they can't be they'll avoid that all out collapse. And so now it's game theory. Who will do this quick enough to avoid that collapse? Well, hopefully, the U.S. continues on the path that you described before with Cynthia Lummis's bill, the Bitcoin Act, and we actually go out there and start adding Bitcoin to the balance sheet of the U.S. government. I think that if that happens, then and we do continue down that path, then that's a path to solidifying the US dollar as the base currency of the world for a long time. And that's because the US dollar would have confidence in it as backed by treasuries, backed by gold. I mean, backed by instead of gold and backed by the digital gold, backed by Bitcoin. And so that's the future that I think I see in the mid to near term. Um, so that not the long term where everything will eventually just be based on Bitcoin, assuming that the network effect continues to grow, and which I have a very high confidence that it will, and that's where we're headed to. But the the punchline is, instead of disaster, we have the ability to run this parallel system for a while and then offload into it. And that's hope. That's why we're Bitcoiners, because we have the hope that we avoid that disaster. I don't want to see all the currencies collapse. I don't want to see death and destruction across the world. It would be catastrophic. It would not be a fun situation. That's why I have hope, and I'm optimistic that we get to a place where Bitcoin actually saves us.
How do you feel about that? I don't want to say dilemma, but that, let's say, paradox of the two parallel systems, right? Because obviously, a lot of people in our mutual spaces, um, have a foot kind of in both arenas, right? I think Michael Saylor is probably the most famous example of this, right? Where people like him, and I would argue people like you and me and others, you know, have this view that it's going to be parallel for a very long time, right? And obviously, other people like Jeff Booth and others, Safety to Moose, believe that Bitcoin's eventually going to take over everything, which we believe too, obviously, right? But how do you approach that? Because when you approach your traditional finance friends and peers, I assume they think you're crazy because you're into Bitcoin. And
Yeah.
in many cases, I've had that where talking to Bitcoiners, they think you're crazy for saying that, actually this whole Bitcoin thing might extend the lifespan of the Fed and the Treasury and this, Fiat Fugazi or whatever, right? So how do you feel being in like the middle of this Venn diagram between two groups that kind of think you're crazy for saying that the other group's going to survive?
Yeah. Well, it's true. It's hard to conceptualize, but the reality is that when you start understanding as a first principle that Bitcoin is primarily right now digital gold. I mean, there's a lot of debate going on whether or not it needs to be, if it's going to be real money, it has to actually be used in transactions day to day. And that I think ultimately is true. But for this point in time, being if you can just understand that Bitcoin right now is the ultimate store of value, and that's why you're going to see that Jesse Myers chart of the 1 quadrillion assets that are investable assets across the world. You're going to start seeing some reallocation, not just out of stocks and not just out of gold, but out of real estate and out of bonds in particular. And once that happens, that's an easier thing to understand. So that that but that in and of itself right there is the the brain has a very hard time getting around a new concept. It was so difficult to understand Jeff Booth's concept the first time I heard it. I had to stop, wait, sit back, think through it, and I ultimately believe he's right. And I love Jeff, and I've talked to him great length as you have, and we've talked to him deep into the night over whiskey about this. But the the confidence in these currencies is so strong that your typical person you talk to every single day just cannot even fathom that there won't be US dollars. They can't even fathom it. And this Bitcoin thing is just this, it's a Ponzi scheme with nothing, there's no underlying value and nothing that it can be turned into other than Bitcoin. And there, it could be controlled and all of that. And what they don't realize is that it's kind of like, you know, it's they're projecting the problems and the worries of fiat currency onto Bitcoin because fiat is really backed by nothing. And you can just print it. People say it's backed by the US military, but it's really just backed by the confidence in it. That's it. And that's why the Fed is so important. And this is where people get tripped up about the Fed. The Fed's job, they say it is to maintain stable pricing and to ensure that they're doing whatever they can to promote full employment. Okay, so stable pricing, full employment. That's 2% inflation, and whatever full employment is, that's is it 4%, 5%? Depends on the time of the cycle, but there's no number. So, but that's not really what their job is. The first principle of all of this is their job is to maintain confidence in the U.S. dollar. Why? Because they need to maintain confidence in the US Treasury as a bond. Why? Because we're not going to stop borrowing. And so that's the issue is that people just cannot even fathom that there won't be a US dollar around in the future. But the reality is all those things that they name about Bitcoin being used for illicit transactions or illicit behavior or illegal behavior, drug trafficking, people trafficking, all of that stuff. The US dollar is worse than all of them. The US dollar is not really backed by anything but confidence that it will be accepted where you take it to go buy goods and services. Otherwise, you might as well just go to the barter system. You know, I can create something that you need, whether it's a wood table or whatever, and you could come back and say, here's a Yeti, you can, I'll trade you that for that, and we can go back to the barter system. Otherwise, why use dollars, right? And why would people use dollars? Because they're confident that wherever you go, they'll be taken. If I go from here to Japan and I don't have any yen, but I've got some dollars, they'll likely take them, But if you're a Japanese, you come here, or if you're Argentinian, you come here, you just try to give me yen or pesos or whatever, they're likely going to say no. But it's the confidence in the U.S. dollar. That's it. That's why it's the base currency, and it remains the base currency because of that confidence. So eventually, people understand that there will be the same confidence in Bitcoin. It's just got to grow, and that network effect is going to continue to solidify it, and people gain more and more confidence in it, meaning they'll feel safe in it. And so once they feel safe in it and realize that, God, those dollars I put in my safe 10 years ago are only worth 50% what they were when I put them in, I don't feel safe with that anymore. It's not about it being accepted. It's about it being mistreated. It's about being, manipulated and devalued every single day. Since we've had this conversation, the dollar's gotten cheaper.
Yep. That's our alarm. It's time to wrap up. But James, thank you for your time. Appreciate you joining today. And right as we end up here, I want to refer back to something you mentioned a moment ago, being that well, not just one time, but some of my favorite memories in Bitcoin have been with people in person. You mentioned that time with you, me, and Jeff over whiskey in the middle of the night, talking about many things. But a lot of people watching this, of course, are huge fans of you, huge fans of your work. Obviously, they wouldn't be watching this deep into the show if they weren't. But all I have to say is that one of my favorite things is spending time with people in person, whether they're people like yourself or me in front of the camera or just everyday people in Bitcoin, passionate about it, investors, hodlers, everybody, right? So James, you're going to be joining us virtually at Camp Nakamoto. I would love for you to say a little bit about why in-person events and making in-person connections are so important to you and what that means to you.
Yeah, unfortunately, I'm on a little bit of a travel hiatus for a while here. I've been traveling too much, and so I got to focus on the hedge fund and family. But it is important. One of the things I think we lost in the pandemic, it became so clear, is being in the office and being around people and sharing ideas and sharing that. That interaction is just it's irreplaceable. You can't get the same type of energy over the camera that you can in person. And so I think and it goes back all the way back to the days of when I first started on Wall Street. If you wanted to work with somebody, you need to get on a plane and go see them in person. If we want to vet a company, we get on a plane, go out there and kick the tire, literally kick the tires. It's where that comes from, right? To see it, to get a sense about what's going on. And there really is nothing that can replace those types of in-person events. And one of the things that I love about them and that I will miss from not traveling this year is the spontaneous conversations that you have. And it's not structured, just standing there in line for, you know, uh, a slice of pizza or something, and there up walks Jeff Booth, and you're like, "Oh, hey, Jeff, big fan of yours," or whatever, or you can tell him that you don't believe anything he says, but you get to do that in person. So, but yeah, I love them, and so I think that's going to be a great event. I'm sorry to miss it, but I'll be there virtually.
Thank you, James, for joining us virtually here today. I look forward to seeing you then again in October and maybe before then. And wish you all the best. Thank you for your time.
Awesome, Luke. Thanks so much.
Thanks.